This video is a review of ORIX's fiscal year 2025 full-year financial results, period from April 2024 to March 2025. ORIX Corporation is a Japanese financial services group. It operates in a wide range of businesses, including leasing, banking, real estate, insurance, asset management, and private equity. ORIX is also known for its involvement in infrastructure projects, even professional baseball, as it owns the ORIX Buffaloes, a team in Japan's Nippon Professional Baseball League. Net income and ROE. ORIX reported record-high net income of 351.6 billion yen, a 2% increase year-on-year, marking the second consecutive year of profit growth. However, the company fell short of its full-year net income target of 390 billion yen. The increase in net income was driven by strong earnings across most business segments, including solid contributions from investees. Despite the overall growth, ORIX proactively booked impairment losses in response to a more uncertain economic and market outlook, prioritizing risk management and financial prudence. This conservative approach, while impacting short-term targets, reflects the company's focus on maintaining a sound balance sheet and preparing for potential downside risks. Breakdown of segment profits. Base profits and investment gains. ORIX reported segment profits of 544.7 billion yen, representing a 3% year-on-year decline. This decline was mainly due to a drop in investment gains, although base profits showed solid growth. Base profits totaled 457.1 billion yen, a 5% increase year-on-year. These profits remained consistently strong, exceeding 100 billion yen each quarter. Key contributors included domestic private equity investees, the aircraft and shipping businesses, and ORIX Europe. On the other hand, investment gains fell 31% year-on-year to 87.6 billion yen. While the company executed multiple exits during the fiscal year, the total was impacted by the absence of one large deal that had been completed in the previous year. Although investment gains fluctuate from year to year, ORIX's recurring base business profits have been steadily increasing. Segment profits. 10 segments. ORIX reported full-year segment profits of 544.7 billion yen, a 3% decrease year-on-year. The decline was mainly due to the absence of one-off gains from the previous year, such as the sale of ORIX Credit's stake and impairments, though this was partially offset by strong performance in several key segments. In the private equity and concession segment, achieved multiple successful exits, and earnings from PE investees improved. In addition, passenger demand at Kansai International Airport remained strong, supporting concession business performance. In the environment and energy segment, profits were significantly impacted by impairments on coal and biomass coal-fired power plants, resulting in a notable decline in segment earnings. The banking and credit segment saw a drop in profits, mainly due to the absence of last fiscal year's gain related to the transition of the credit business to an equity method affiliate. Meanwhile, the aircraft and ship segment continued to perform well, supported by robust passenger demand in the aircraft business and profit contributions from Santoku Senpaku, now a consolidated subsidiary. FY2025 results and FY2026 forecast. For fiscal year 2025, net income grew year-on-year, up 2%, and a 22% increase in dividends, reflecting solid performance and continued shareholder returns. For fiscal year 26, ORIX forecasts net income of 380 billion yen, aiming to achieve a third consecutive year of record profits, driven by expected growth in the operation and investment segments. The FY26 shareholder return plan includes dividend payout ratio of 39%, which translates to an estimated full-year dividend of 132 yen per share. A share buyback program authorized up to 100 billion yen. For fiscal year 26, ORIX is expected to achieve record-high profits once again, with plans to increase dividends and carry out share buybacks, indicating continued strong performance. Macroeconomic environment. Trump tariffs impact. ORIX stated that there was essentially no direct impact from Trump-era tariffs, as the company has no trade transactions with the U.S., though it is monitoring potential effects on second-hand markets for cargo, ships, and aircraft. On the indirect impact, ORIX noted the risk of an economic slowdown in the U.S. and China due to negative inflation, which could lead to impairments at existing investees or borrowers. ORIX noted that while some U.S. and domestic private equity investees may face supply chain or operational risks, their overall portfolio impact is limited, and the company has maintained a cautious stance on both regions. ORIX is carefully evaluating new investments, particularly in U.S. renewable energy and ORIX USA, but expects to sustain momentum through domestic real estate and private equity, even if some exits are delayed. The company also acknowledged that yen appreciation could pressure real estate exits and dampen earnings from inns and airport concessions, though strong domestic investment and tourism demand provide support. Despite an uncertain economic outlook, ORIX reaffirmed its goal of achieving record profits in fiscal year 26, with a continued focus on enhancing enterprise value and return on equity over the medium to long term. Shareholder returns. ORIX announced a record-high full-year dividend per share of 120.01 yen, continuing a strong growth trend with a 21% compound annual growth rate since fiscal year 11. For fiscal year 26, ORIX outlined a shareholder return policy that commits to paying either 39% of net income or maintaining the fiscal year 25 dividend per share of 120.01 yen, whichever is higher. Additionally, the company introduced a share buyback program authorized up to 100 billion yen, which it plans to implement flexibly, depending on market conditions and capital needs. As before, ORIX continues to place a strong emphasis on shareholder returns. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 2,942 yen as of May 13th, and the US dollar stock price is $20.51 as of May 12th. Current PBR is 0.82 and PER is 8.8. Dividend yield is 4.08%. Compared to the past few years, indicators PBR, PER, and dividend yield suggest that the current stock price is slightly undervalued. Although the stock price temporarily declined due to the Trump tariff shock, it has been recovering recently. The company has also been consistently increasing its dividend, and with a yield of over 4%, it is now considered a high dividend stock. Conclusion. Although FY2025 full-year results did not reach the target, ORIX achieved a record-high profit and also increased the dividend. Furthermore, the forecast for fiscal year 2026 also expects a new record-high profit. So, if achieved, dividends will be increased again this fiscal year. Since the impact of the Trump tariffs is said to be minimal, the company's performance is likely to remain more stable compared to other companies. It seems promising going forward as well.